I'm Adam Wilmoth, Energy Editor at The Oklahoman. I'm joined today with Steve Lackmeyer. We've got a pretty big announcement today that could affect the Oklahoma City skyline.
Yeah, it's not good news. OGE Energy Corp is announcing today that they're putting on indefinite hold their plans for the block at Hudson and Sheridan. This is where they were going to build 4 towers, including a headquarters. It was Clayco out of Chicago that was acting as developer. And they're saying due to changing market conditions, they feel like it's no longer a good time to do this. There's right now a fairly large hole in the ground that often fills up with rain. It's not a very visibly pleasing sight for downtown, especially in such a growing area. They're promising to take the fence down, clean it up, and turn it into green space. But this project is definitely on hold, and it may be on hold for quite some time.
Well, Steve, is this something that was expected? Is it something that we thought might be a possibility?
Somewhat. We've been getting very mixed messages. City Hall have been negotiating with Clayco over what would have been a historically high amount of tax increment financing that the company had requested. That amount would have been initially over $100 million. Then they got it down to the 40s, and then recently I was hearing that it had gotten down to even below $10 million, which would have made it very viable. Of course, that meant that they were going to scale down the size of the project. Keep in mind, when this was first proposed, it was a 2-building project, one that would have been about 14 to 16 stories for OG&E, another one that would have been 8 to 12 stories that would have been either housing or a hotel. That was pitched as Clayco and G. Rainey Williams, who originally purchased the site, were pitching to tear down Stage Center. Public reaction was not very enthusiastic over the height of those buildings, and that's when Clayco came out with a 4-tower proposal that would have resulted in 2 25-story office towers, one for OG&E, one would have been spec space, and the other 2 would have been apartments. They also promised a very aggressive timeline where construction was to start on 3 of the 4 this last year. Of course, that did not happen. As the year dragged on, I was hearing that the south half of this project was dead, which I've been telling readers. But even last month, I was hearing from some at City Hall that they thought a deal was near between OG&E and the city to do not just 1 office tower, but also one apartment tower. They were looking at a lower height. I was hearing it was going to hover around 20 stories, but there were others who are cautioning this may not happen. Things have been changing, not just with the price per barrel of oil, but there's this rate case that OG&E is embroiled in. There's some other factors going on, and we're not entirely certain this is going to happen at all. So I've been hearing very mixed messages, but indeed, this is being put on hold.
Now, this site has quite a history as well. That was the site of Stage Center.
This site was home to Stage Center, a groundbreaking design by the late architect John Johansson, himself a student of the legendary Frank Lloyd Wright. It was unlike any other theater built anywhere. It was designed during the brutalist phase back in the 60s. So this is a design that did not capture public love and support like some other architectural movements did. But it certainly was famous. It was in architectural textbooks. It was well known throughout the world. And when G. Rainey Williams sought to tear it down, he faced quite a bit of opposition. It was not in great shape. It had been flooded in 2010 and in disrepair since. People argued it could have been turned into a children's museum. Others said turn it into an art gallery. None of this really took root. No one could find the money to buy this and redevelop it. So G. Rainey Williams got permission to tear it down, and it was after that he came out with Clayco and proposed the 4 towers, but then also approached the city for this tax increment financing, and none of that went well. And meanwhile, we've seen a big change in oil prices, and nobody knows about that more than you, because this was all coming out between summer of 2013, summer of 2014. And things changed in summer of 2014, didn't they?
They changed pretty dramatically. There for a year or two, the price of oil was hovering around $100 a barrel. Summer of 2014 started to fall, and it was on Thanksgiving Day a little over a year ago, that OPEC decided to keep producing at as much as they could. That combined with heavy production here in the United States caused oil prices to fall very quickly, very fast. Now down to a little over $30 a barrel. That's a very difficult number for any oil producer. They've cut back on drilling. They've cut back on the use of services companies. Oklahoma companies aren't building pipes or valves. The whole industry is slowing down.
And what's the outlook for the next year or two?
It looks tough. There's still a lot of speculation. There's still strong production, even though domestic companies have cut way back on their drilling. They've gotten too good at what they're doing. They're able to produce a lot of oil from just a few wells, and production hasn't slowed down as much as a lot of people thought. You've got Iran is probably going to start selling a lot more oil on the market. OPEC, Saudi Arabia is continuing to produce, and then on the demand side, there's a lot of concern about China's economy, some other parts of Asia, and even here in the United States. It seems like demand is slowing down a little bit, and that could have some very strong ramifications on oil prices going forward.
See, and another factor that's clearly in the background of this situation is Sandridge. Sandridge, which bought the old Kerr-McGee property, did a very nice renovation, built this whole new building that's 11 stories, and it's empty right now, 120 Robert S. Kerr. And that whole property is for sale, and they were first expecting it to sell by the end of last year, and it has not. And now Sandridge, the question is that whole tower, 29 stories, going to eventually go empty?
Yeah.
I mean, are there people out there who are concerned about it? Sandridge?
Sure. I think all oil companies right now are a little bit suspect, particularly the ones that have a lot of debt and not a whole lot of income. Sandridge is definitely in that list. They were removed from the New York Stock Exchange last week because their stock price dropped too low. It was down to 15 cents. The last time I looked this morning, it was about 7.5 cents a share. It's a stock that not too long ago was trading for, only 4 or 5 years ago, was trading for $68 a share. It's down to 7 cents. And that is going to affect that company and others. Now, Sandridge does have, they secured some $1 billion in debt financing about a year ago when markets were still starting to slow down, but they got ahead of that wave. They have bought some property in Colorado that they're very hopeful for. But the bulk of their production is in northwest Oklahoma. It's in the area where the Oklahoma Corporation Commission and Oklahoma Geological Survey are looking at possible connections to all the earthquakes that we've been having in that area. There's a lot of issues.
So we could see a big change over there. So all of this is coming into play with the downtown real estate market, where there were a lot of assumptions made in 2014 that are no longer true. And we still have a very healthy vacancy rate still in Class A office space. But if Sandridge goes empty, we may be seeing a big drop in demand. And clearly that's one of the things that's going on with OGE Energy Corp. It's also interesting to note they are today for the first time revealing that part of their contract with Rainey Williams is for them to assume ownership of this property. And what they're saying is they're going to turn it into green space, they're going to take care of it until there's a project that is worthy of this prime location, which I find interesting and one of the questions that remain are they going to eventually build there if oil recovers? Or are they just going to sit there and see if anyone else will do development there? So there's a lot of things. Also, there's another big garage that was going to be planned with this that had caused concerns about having so much structured parking on all sides of the John W. Rex Elementary. So there may be some good things at play here in that maybe something different will be proposed that won't create such a preponderance of parking. I mean, thousands of cars at one corner across from the elementary school. That was a concern I talked about in an early column. They were looking at eliminating the bike lane along Walker Avenue. There's all sorts of implications of this. Many of them are bad. We also have to find out how does this affect the proposed tax increment financing district that they want to do in Court Shore that would have included this property, and also the 27-story tower that is under construction along with two garages. That'll be BOK Park Plaza. That's at 499 West Sheridan. Devon will be in that for 225,000 square feet. BOK is taking a few floors. So that area was already about to get pretty dense. But certainly this will relieve some pressure from that area, and it won't be so dense that we're going to have to sacrifice everything to make it work. There might be some more thoughtful planning and ideas that'll go into this area before anything develops in the future. But certainly the preservationists are going to have a big "I told you so." They're going to be very unhappy that there were promises made to secure permission to tear down Stage Center, which was the only internationally recognized architecture building in this state, not just the city, but the state. It's going to be controversial. And OG&E, meanwhile, obviously, they've got some other issues they're dealing with. Certainly, you can explain a little bit this, but it's not like they're losing money, but they've also got other things going on. Can you talk about that?
Yeah, OG&E is a regulated utility, so they do have a guaranteed 10% return on their utility side. But they also they also have a pipeline company. They're in the natural gas business, and that part of their business. If companies aren't drilling as much, then they're not producing as much, and so some of their assumptions they made a couple of years ago on how much growth there would be in their system, a lot of that has slowed down.
And let's remind people, what is oil today?
Oil, last I checked, was about $31.77, which is far from the $100 it was a year and a half ago, but more than that. I don't think anybody expects it to go back to 100 or even needs it to be back up to 100. But I think oil companies would be comfortable at $60 to $70 oil, which is about, we were getting close there this past summer. But since then, the price has fallen very heavily, and nobody's happy at $30 a barrel.
And this is how quickly things can change. And even how a month ago I was hearing that this still was likely to happen, and now it's not.
Yeah, the summer when oil's $60 a barrel, people were happy with that, and it looked like things were going to improve by the end of the year, and people were looking forward to 2016.
Now they're not.
Right now they're not.
All right. Well, we'll have much more coverage. Paul Monies is working with us on this. Brown and Bailey. We're exploring the history of this project. We're talking to preservationists. We're talking to the CEO of OG&E, Sean Trosky. We're going to have a lot of coverage in tomorrow's Oklahoman.
Okay, so we look forward to it on oklahoman.com and newsok.com.